home buyers and sellers alike feeling a massive struggle to close deals or make money.
The cost of living crushing everyday Americans, leaving the American dream out of reach for many.
And we really are in one of the most unaffordable housing markets that I think we have seen in a really long time.
The state of the housing market in both the U.S. and U.K. is extremely alarming. A staggering 70% of people in the U.S. who seek to buy their dream home are now finding it impossible to afford. Meanwhile, in the U.K., home affordability has hit its lowest point in over a century, and the situation is not looking likely to improve anytime soon. 2 generations ago, you could buy a house at a reasonable price. However, things have changed drastically, and house prices have doubled in just that short span of time. Despite this, wages have remained stagnant far below the inflation line. This means that even if you're lucky enough to have a job, your income may not be enough to purchase a home. Moreover, mortgage rates have sharply increased in recent months, reaching a high of 6.7%, making homeownership a mere pipe dream for many people. The fact that rental prices are skyrocketing only adds to the nightmare, forcing those who cannot afford to buy a house to face exorbitant rent payments that take up a significant portion of their earnings. Major institutions and hedge funds such as BlackRock are at the forefront of a disturbing trend, making it increasingly difficult for ordinary citizens to purchase homes. The story has been widely reported across the internet and cable news, and rightly so, as it has sparked a heated debate regarding the true reasons behind this concerning phenomenon. Those who argue against the role of corporations and institutions in the housing market seem to be missing the bigger picture. They claim that these powerful entities own only a small fraction of the housing market, while other, more significant factors contribute to the steady rise of housing prices. However, this line of reasoning is fundamentally flawed. Please take 2 seconds to help me out and hit the like and subscribe if you're enjoying the video so far. Each like and subscribe helps support this channel and keeps us motivated to keep making you great content. Thank you. Now, back to what I was saying. In reality, corporations are absolutely to blame for the current state of the housing market. One of the foremost proponents of this argument is Robert F. Kennedy Jr., who argues that the real reason why housing prices have outpaced everything else is that 3 giant corporations, BlackRock, Vanguard, and State Street, already hold a whopping 88% of the stock market. Now, they are setting their sights on single-family homes. Vanguard, Blackstone, the UBS Group, and BlackRock have ramped up their buying activity in the housing market, resulting in a total purchase of $60 billion worth of properties. This alarming trend has brought the entire system to the brink of collapse as the average person struggles to find affordable accommodation. In San Francisco, an individual can rent a bed in a dorm for $1,200 per month without even obtaining a proper flat or room. In comparison, one could rent a small cupboard under the stairs for just £500 per month in London. The issue with the cost of living crisis is already overwhelming, and this additional strain will likely result in a catastrophic outcome. However, the problem only worsens with these companies' advent into the market. They have cornered the market with their massive buying power and brought the entire housing system to the brink of failure. The pressure they've put on the system is measurable through the billions of dollars they've injected into the market. Managing trillions of dollars on behalf of their clients, these companies are investing heavily in the housing market to make a profit. However, this trend is having dire consequences for regular people. These trillion-dollar companies are using their immense financial power to price out ordinary individuals from the housing market with alarming ease. It's not uncommon for them to make offers 50% above the asking price in hours, leaving regular people with no chance of obtaining a home. This situation is particularly problematic because it pushes the prices of homes to astronomical levels, leaving many unable to afford even the most basic shelter. It's worth noting that this issue isn't just limited to one specific area. It's happening across many regions in the country. Experts warn that if this trend continues, the gap between the rich and poor will widen further, setting the stage for social unrest and instability. This is a dire situation that we must not allow to materialize. BlackRock has been described as a global financial behemoth that wields great power and influence. According to popular theories, they control and own everything. However, this may not be entirely true given their recent setbacks. For instance, Their share price has decreased by 8% this year, which is not indicative of a company with complete financial control over the world. The company BlackRock is led by Larry Fink, who is its CEO. While he may not look like a typical evil villain, rumors exist that he may be a master of disguises. This raises questions about the true nature of BlackRock's power and influence. BlackRock indeed controls trillions of dollars in assets. However, it's important to note that this is not their money. The money belongs to their extremely wealthy clients. In fact, just to start investing with BlackRock, you need to have a minimum of $250,000. This highlights the extent of the firm's wealth and clientele, which raises questions about their true agenda and motives. Investing with BlackRock can get you plenty of benefits, but it gets much better if you fork over $40 million. In this case, the company will slash their annual fee to an impressive 0.5%. And if you decide to invest an astounding $50 million, the fee becomes negotiable. If rumors are correct, BlackRock might even go as low as 0.3% for those investing and losing $4 million. Investing with BlackRock might make you a part of a bigger picture. The company is said to be the top contender in the global conspiracy to control the world. The recent rumblings suggest that BlackRock is eyeing real estate as its next target, a piece of news that has everyone in an uproar. BlackRock has recently announced its intentions to invest an extremely substantial $120 billion into the U.S. housing market. However, their purpose is not to purchase individual properties, but to construct homes solely for rental purposes. This major investment into the rental property market suggests that housing affordability will likely become a more pressing issue for the average American. By constructing housing projects purely for rental purposes, BlackRock aims to generate an enormous profit for their clients keen to cash in on the rental market boom. The sheer scale of BlackRock's planned investment in the U.S. housing market has given rise to concerns that the rental market may become dominated by a single corporate giant, leading to a situation in which ordinary families would not be able to afford decent housing. While BlackRock has stated that they will not purchase single-family homes, it remains uncertain what impact their rental housing projects will have on America's already struggling housing market. BlackRock holds a significant stake in Invitation Homes, 6.6%, with a staggering value of $1.347 billion US. This makes BlackRock one of the biggest shareholders in this notorious renting company, which has already purchased 80,000 homes across the United States. The idea of a renter's economy sounds abstract and difficult to grasp. Still, the reality is that powerful entities like BlackRock and Vanguard Group are investing heavily in companies like Invitation Homes because they know that the rental market is booming. Vanguard Group is the largest shareholder in Invitation Homes, with a stake of 18.4%. These companies are betting on a future where homeownership is increasingly unattainable for many and renting becomes the norm. Also, it's no secret that BlackRock is a key player in the Vanguard investment firm. In fact, it wouldn't be an exaggeration to say that they have a near all-encompassing presence within it. Their influence and control cannot be overlooked, as they have their fingers in virtually every aspect of the company's operations. BlackRock appears to be keeping a squeaky clean image for the public eye. However, this could be seen as nothing more than a facade to keep their true intentions hidden from view. After all, they are a massive stakeholder with a vested interest in maintaining their power and control over Vanguard's affairs. The evidence suggests that BlackRock will stop at nothing to protect their own interests, even if it means sacrificing the interests of others. In 2022, 25% of homes could not find buyers who needed them. Rather, institutional investors swooped in and grabbed them, making a harrowing 12% increase from last year. Wall Street, which historically kept its distance from such homes, has now made a dramatic about-face. For years, their funds were channeled into mortgage bonds, financial instruments that relied heavily on the general public repaying their mortgages on time. The infamous Wall Street, the very reason for the financial crisis, saw a window of opportunity amid chaos. One particular company, BlackRock, established itself by exploiting the crisis. The U.S. government hired BlackRock to manage an enormous sum of money and assets left behind by the crisis, paving the way for a multi-trillion-dollar giant. BlackRock, a corporate powerhouse, used the extensive connections at its disposal to make a solid profit. However, other companies took a different path. Instead of investing in mortgage bonds and profiting off the housing market, these companies chose to buy houses outright. This tactic allowed them to make a fortune due to the numerous foreclosures. The situation was alarming due to the massive number of homes that were sold at incredibly low prices. Companies capitalized on the opportunity to swoop in and take ownership of properties. The housing market was at a standstill with no significant influx of buyers. The government authorized institutional investors to purchase hundreds of thousands of foreclosed homes to combat this issue. This gave them almost exclusive access to properties sold for as low as $50,000 or $60,000, with most of them ranging between $100,000 and $150,000. However, this move would prove to be a catastrophic mistake years later. The housing market became dependent on these large corporations, leaving the average person out. It resulted in unaffordable pricing and an overcrowded market for buyers. The institutional investors used their resources to gain an advantage and create a monopoly on the property market. This is creating an alarming situation as regular citizens are unable to buy homes for themselves and instead are forced to compete with institutional investors who hold a dominant position in the market. The government's decision to allow these investors to gain exclusive access to the housing market has no long-term benefits and instead created a wealth gap and hindered the growth of the residential property market. This mistake is harming the housing industry, and a change in policy is required to uplift the market and create equal opportunities for all. The first set of housing auctions had many rundown homes in bad condition that needed a lot of repairs before people could live in them. The idea was that companies acquiring possession of these properties would renovate them to meet a certain standard and then rent them out to families in dire need of housing. Over time, it was expected that these families would become the homeowners. However, this proved to be more challenging than anticipated. The key issue was based on the assumption that Wall Street investors would follow the rules this time and avoid taking advantage of the system, as had happened just a few years earlier. However, the design was flawed. The trap was set, and the floodgates were opened, resulting in billions of dollars from Wall Street pouring into acquiring these foreclosed homes. In just 6 years, $36 billion from Wall Street was funneled into purchasing over 200,000 foreclosed homes. This sudden influx of money birthed a new, opportunistic financial industry. Companies popped up out of nowhere, all vying to seize the chance to profit from this newfound gold rush. They pounced on the opportunity to purchase these homes in bulk, often acquiring thousands of properties at a time. The largest of these companies was Invitation Homes, which at its peak owned more than 80,000 single-family homes. However, even this massive company couldn't resist the lure of being incorporated into Blackstone, an investment behemoth with nearly $1 trillion in assets under its control. The implications of this rapid acquisition of homes are stark. Families were forced out of their homes, neighborhoods were gutted of their stability, and all with the sole purpose of earning a quick buck. However, the tides have turned. After the housing market crash, which led the financial realm into a devastating crisis, mortgage bonds lost their value, causing a ripple effect of financial chaos throughout the world. This was primarily because banks poured mountains of debt into the ballooning housing market. Unfortunately, their risky investments went south when the housing market plummeted. The recent financial crisis saw some of the world's largest banks crumble. Like a string of restaurants and the now defunct Lehman Brothers, these financial giants waned, and the government was forced to step in with billions of taxpayer dollars to bail out the industry. However, this couldn't undo the damage they had caused. This disaster had a ripple effect throughout the global economy, leading to one of the most significant economic collapses in modern history. On that fateful day when the stock market plummeted, Wall Street saw the worst day since the crash of 1987. The financial crisis had dire consequences for everyday people as well. The sound of the opening bell served as a reminder of this fact. A hurricane had ravaged the coasts. Countless families lost their homes and livelihoods in a matter of hours. Some analysts say it's a widespread misconception that large companies own most of the rental housing in the United States. However, the truth is that these enterprises only account for a mere 1% of the entire rental housing market in the country, and barely 2% of single-family rental properties. This might seem insignificant, but the real problem occurs when one realizes that these institutions significantly shape the industry through their actions. Indeed, big money institutions are creating a scenario where builders are incentivized to construct more rental properties for them rather than building starter homes for potential buyers. This unhealthy trend contributes significantly to the existing shortage of housing supply in the market. The alarming fact is that this issue is growing more severe by the day, with 5 major institutions being the primary contributors to the problem. They are knowingly creating a market that benefits themselves while disregarding the needs of the American people. One of the largest institutions in the country has spent a staggering $1.5 billion just this year alone, paying D.R. Horton to construct a massive 4 million rental homes. But that's not all. Invitation Homes has joined forces with a company to build 72,000 rental homes, while AMH American Homes partnered with JP Morgan Asset Management to construct even more rental homes. These monetary institutions' partnership with home builders is resulting in fewer homes being prioritized for normal people. More and more homes designed explicitly with investors in mind are being erected, serving as rental properties instead of being made available to the average American citizen seeking affordable housing. This isn't merely a matter of opinion. Historical data dating back to the late 70s and early 80s verifies this trend. Unfortunately, the implications of these actions are profound and disturbing for most Americans struggling to find adequate and affordable housing. Thanks for watching, and please make sure you subscribe if you enjoyed the video and leave a comment below with your thoughts.